It's been a long time that we had a correction, and I think that's important to keep in mind. And we turned tactically a bit more cautious 3-4 weeks ago, roughly, and there were 3 reasons. I think the first reason was the U.S. economy and generally U.S. data has been weaker, and it's been weaker for 2 months now. This is not the first print we got. Yep. And the market has treated that as bad news as good news. If anything, we actually saw the S&P futures positioning move more bullish in the last 2 months. So you had this disconnect. Bad news was good news, and the market was actually getting more bullish. That was the first concern we had. Eventually, the Fed buffer cannot be big enough, or the bad news becomes bad news. The second reason was valuation expansion in the tech space. I think last year, the Magnificent Seven, a lot of the performance was actually driven by earnings revisions. This year, a lot by valuations. So our team, David Kostin and so, they were really highlighting this earnings season, high bar to beat. And the third reason was the U.S. election uncertainty picking up. So all of these factors have actually materialized, and they've contributed. But of course, as you were saying, the most important has been the U.S. data weakness. I think the U.S. data weakness has also surprised us a bit. Our economists are not that worried, and we can discuss that. But all in all, I think we're dealing with a correction that, it's a terrible word to use, but it's somewhat healthy. You've had a very strong run this year. Positioning was a bit too bullish. The data picture has been a bit more mixed. We have more election uncertainty coming up. And I think to some extent, it's a healthy correction.
A healthy correction in stocks, perhaps. Is a 70 basis point move in the 10-year or the 2-year, I should say? Either one, pick your metric. They're both down about that. Is that a healthy correction?
I think a bit to what Guy said earlier, I think it's a healthy or rational move, in the sense that the market needs to price now downside convexity into rates. I think before there was a lot of focus on normalization cuts. Normalization cuts are steady, whereas if you have reactive Fed cuts, we know that the Fed has a lot of buffer to potentially cut. You need to put in the probability of very large cuts now. So to some extent, again, it's somewhat rational. But that move, I think, is tough to extrapolate from here with our base case macro outlook, because it really starts to move towards a higher probability of a recession. And to be clear, our economists have increased their probability of a recession. I think they were at 15% just before the weekend, which is the unconditional probability. Now they're at 25%. 25% is still not a shocker. Yeah. I think considering your very late cycle in some regards, that needs to be reflected by the bond market. So it's somewhat rational.